Right. Yeah, welcome everyone to the section on introduction to financial markets and trading. So at this point, I'm assuming that everyone is a complete beginner. So this particular section is actually meant for complete beginners. And also maybe if you're already an experienced trader, I believe you should still hang on and watch this video, because I believe there are one or two that you also learn to help you in your trading career and your trading journey. And this is the bedrock of everything we do in the trading industry. So I also advise you to pay attention to every detail. So since this is the basic, this is the foundation of everything. So every details matters. So you need to pay attention to every detail, because they are going to form the basis of what you'll be doing as we advise in the course of this training. So what is Forex? So Forex is an electronic market that is traded over the counter. Now let's bring this home. So most of us we've done one or two transactions, maybe with the aboki on the street or with your friend around. You've done one or two exchanges. So you're actually exchanging one thing with another person. So that is an exchange. Yes, so that same thing is also Forex. But when it comes to Forex, is an exchange over the counter, what we call OTC. So it's traded electronically, unlike the way you do it traditionally. Instead of looking for someone that buys or sell, you give the money, exchange the good. But in Forex is OTC, so over the counter trade. So Forex is the largest market in the world, and as of today, it has a daily turnover or transaction of $7.5 trillion. So every day, there are $7.5 trillion exchanged in the Forex market. So basically, in the market, we're actually doing two things. So we're only doing two activities. So it's either you are buying or you are selling one currency or assets for another currency or assets. So the two primary activities we do in the Forex market is buying and selling of currencies or assets. So this is what we do. Okay, so the Forex is a 245 market. Now, this is for the currency market. So as we go further, you are going to understand when we look at asset classification, you are going to understand that we have the currency markets and have the other market, the indices and the rest you get. So for the currency markets, which is what we be primarily be focusing on for a start, is a 245 market. 245 means that it operates 24 hours and 5 days in a week. So the Forex market or the currency market, it opens on Sunday nights. That is, if you are in Nigeria, it's going to be Sunday nights and closes on Friday nights. So we still come to the market trading section. So in the market trading section, we are now going to know what time does the market open and what time does the market close, and we also know the various sections. So for the currency market, is a 24/5 markets. So what is traded in Forex? So in Forex, we trade assets or currencies to actually make money. So basically, you are buying or selling one currency or another. Now, before the advent of, when Forex actually started initially, people like I and you, we don't have the capacity. In terms of capacity, capital, we don't have what it takes to partake in this industry, because initially it was meant for the lords, it was meant for the wealthy guys that transact billions of dollars, trillions of dollars. So it was initially meant for the wealthy class, you get. But because of the help of technology and other things, we now have the people we call brokers. So what brokers do is that instead of one person bringing the whole money to be able to join the big guys, they now create a platform whereby no matter any amount you have, you can actually come in, pull resources, join the big guys. So the broker, they give you the platform that allows you to trade the financial market from any place you are in the world. So that is why you need to know about Forex. So what you just need to have is your internet, have your laptop or your phone. So once you have these two things, you can comfortably trade the market from any place you are in the world. Can comfortably trade any assets from any place you are in the world. So not only that, they give us this electronic platform, they also give us what we call leverage. We are going to come to leverage to understand what we mean by leverage. But just to give you a quick hint before we go to the session on leverage. Leverage is just like, let's say that you want to buy something and the price is $100. So your broker is going to bring 99% of the money. So that is, he's giving you a leverage. Why you are going to bring 1%. You get, so the broker is, will I say, is kind enough to give you 99% and you just bring 1%. But that is that for now, because when we now go to leverage, you are going to see that this leverage is like a two-edged sword. So if you use it well, you are going to make more profits. And if you use it wrongly, it's going to wound you. So stay with me. So they give you this leverage so that you can be able to actually access and trade the financial markets. Now let's look at the structures or the major participants in the forex markets. So these are some of the major participants in the forex market. We have the central banks. So these are, we call them the trend settlers. So they actually control the money supply in a given economy. They control the money supply in a given economy. So the central bank, they control the money supply in a given economy. Something like the Central Bank of the United States of America, London, Central Bank of Amsterdam, and the rest. So trading actually started in Amsterdam, but I don't want to go into history of how everything happened, but the whole idea of everything started back then in Amsterdam. Then we have the commercial banks. So these are the private credit organizations that do most of the global currency trading through electronic networks, you get. So we also have the governments. So the governments actually contribute to the activity in the forex market. So they are one of the major participants because they set economic goals that shake the market with political decisions. So they are one of the big players or the big guys in the forex markets. Then we have the cooperatives. So in cooperative, you are now looking at active hedgers, maybe hedge funds trying to protect their profits, or every hedge fund you can think of, they fall under this kind of guys. So they're one of the participants in the forex market. We have the investment funds as well. Yeah, we have the investment funds, but where I and you now falling are the traders. So we traders, we are the risk-taking individuals. We come to the forex market to earn money fast. You get, so we are more like the risk-taking individual. So these other guys, they have funds, they can push in billions of dollars, trillions of dollars, and they have the liquidity, so they can open position that can last for maybe a year, in months, or in quarters, or whatever. But me and you, we might just open position that will last for a day, maybe in months, depending on the type of trader you are. We still come to understand the various type of traders we have, whereby we have the day traders, the swing traders, the position traders. But just a quick insight, for a day trader, you are going to, for day trader, they open their trade and close it within a day. For swing trader, maybe they open their trade, it can run for days, maybe weeks, months. But for position trader, it's more like maybe, let's say, more than a month, 2 months, 3 months, 6 months, or even 1 year. So it depends on the trading system or style that suits you, and also depends on the capital you have. So if you have small capital, maybe $100, being a swing trader might not actually be the best route to go, or it might not actually be ideal for you to start swinging with $100. So you actually need liquidity, because if you are swinging, maybe, let me not go there for now. Let me not go there. We still come to that. Now let's look at some of the terminologies used in Forex. So we have the bulls. So the bulls, they are the buyers or the uptrend traders in the financial markets. So when somebody tells you that I'm bullish on this market, simply means that he or she is telling you that my perception or insight about this market is just to buy alone. So a bullish market is a market that is dominated by buyers and it trends upwards. So when you see the candles, we still come to candlestick, the candles will be going up. Then we have the bears. The bears are the sellers or the downtrend traders in the financial market. So a bearish market is a market that is dominated by sellers and trends downwards. Now, what we call long. So to go long means to buy an asset, right? So we also have what we call short. So go short simply means to sell an asset. So when you are in the midst of traders, so when a trader tells you that I went long on this particular asset, it simply means that I bought this asset. Or if you say that I short this particular asset, it simply means that he or she sold the asset. Then we have what we call the ask. So ask is the buying price of an asset. We also have what we call the bid. So the bid is the selling price of an asset. Now, if you are someone who is into real estate like me, you might have seen some advert. They will tell you that the asking price of this particular asset is so and so million. So it's just telling you that this is the buying price. You get so outside Forex, you still make use of some of these terminologies when it comes to dealing with things finance. In the finance world, these terminologies are relevant. They are very, very important. So the bid is the selling price of an asset. Then we have what we call spread. All right. So spread is the difference between the bid and the ask. Get spread is the difference between the bid and the ask. Now, this spread is the commission of the broker. Now, remember that the broker gives you a platform for you to trade and also give you leverage. Get so they are not stupid. They are not doing this. Nobody enters the business. Nobody enters a business without the intention to make money. So spread is one of the ways they make their money. So spread is their commission. So let me quickly show you before we continue. I know that this particular platform, this is called the MetaTrader. I know that it might be strange, but stay with me. I will still explain to you how to use this, how to set it up. I'll walk you through how to do everything, but I just want to show you the spread. So if you see here, we have the bid. All right. So this is the bid, this is the ask. So for an asset like GBP/USD, so this is the bid price, which is 1.28581. Get why the ask is 1.28587. So the spread is the difference between the bid and the ask. So if you check the difference between 7 and 1 is 6. So the spread varies based on assets and also based on maybe the various trading section or based on the volatility of the market. So this spread varies. So we still come back to MetaTrader 4 or you watch out the video on MetaTrader 4 to understand how to set up the MetaTrader 4 and understand everything about the interface. So I'm going to do a detailed video that will explain this, but just want to show you now because I mentioned it in my explanation. Now let's look at what we call the trading section. So this is very, 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 very important. So you should, in short, you need to write this down. I mean, you need to, will I say, write this and put it in a strategic place where you be seeing it. Because this is going to form the, well, I say the bedrock of most of your activity, especially as a currency trader. You need to pay attention to this time frame. It's very, very important because you don't want to be at the wrong market at the wrong time. Yes, so with your understanding of market trading session, you now know, okay, which of the assets should I be trading at this particular time? You get? So these are the major trading sections. So the market opens every day with New Zealand. So the market starts by 10 p.m. in New Zealand and ends by 10 p.m. in New York. So New Zealand is like the major trading hub. So market opens in New Zealand and closes in New York. So as a trader, you are waking up in New Zealand every trading week or every trading day, and you are closing in New York. Now, this is the local time. So that means if you are in a country like Nigeria, this is the local time. That is the GMT plus 1. So for the New Zealand, it's going to open by 10 p.m. and close by 7 a.m. Yeah, but if you are, let's say you are in Australia, this is going to be the local time. That is 7 a.m. to 4 p.m. You get? Now, for the Asian section is going to open by 1 a.m. and close by 10 a.m. Then the London section is going to open by 8 a.m. and close by 4 p.m. Then the New York section, United States of America, so it's going to open by 1 p.m. and close by 10 p.m. Now, there is what we call volatility, right? Now, and volatility increases. Volatility increases when two or more trading sections are open at the same time. You get? So when two or more of these trading sections are open at the same time, the volatility, there is rapid movement in the volume of trading activity. So now let's look at some of the overlaps. Now, Asia overlaps with Sydney. Remember, Asia, the Australian or the Sydney open by 10 and closes by 7. Now, Asian or the Japanese or the Asian people and the rest or whatever, they open by 1 a.m. and close by 10 a.m. So within 1 a.m. to 7 a.m., they have like 6 hours left. So there is an overlap of about 6 hours. So these two sections will be trading. They have like 6 hours, they transact together. Then London overlap with Asia, but that's just for 2 hours. Yes, so the Asia starts by 1 a.m. to 10 a.m., while London is opening by 8 a.m. to 10 a.m. So that's just like 1 hour, 2 hours overlap. So it's not really significant, but it's significant. Then we have the New York. So the New York overlaps with London and is for 3 hours. So remember, the London is going to open by 8 a.m. and close by 4 p.m. While the New York is going to open by 1 p.m. and close by 10 p.m. So there is an overlap of about 3 hours. So these are the various overlaps. Now, each of the market section lasts for 9 hours. All right, so each of this market section is going to last for 9 hours. Each of the market section is lasts for 9 hours. So these are the major trading sections. So we still have the Frankfurt in Germany, but this guy, they don't actually, their contribution is not really significant. So I don't actually pay attention to them. So these are the major 4 that you should pay attention to. Now, take for instance, maybe tomorrow you travel to any country. Maybe let's say tomorrow you travel to a country that maybe their time zone is not here. It's not in this particular chart I'm showing you. Get, you can actually make use of this website. Just Google Forex time zone converter. Forex time zone converter. Okay, when you Google this first one, time zone converter. So from here now, you can now go down to choose any country you want. Let's say, maybe, let me just change it to, let me change, which country should I change this to? Okay, let me change Brazil. Check Brazil or Mexico. Okay, let me just say that I'm in this country. Yes. So it's going to recalibrate and give me at the time in that particular country. So if I'm in this particular, if I'm in Mexico, you get, so this is the time that London session will be opening. It's going to open by 1 a.m. and close by 9 a.m. Then the New York will open by 5 a.m. and close by 1 p.m. Then the Sydney will open by 2 p.m. and close by 10 p.m. The Tokyo will open by 4 p.m. and close by 2 a.m. So this will come in handy maybe when you travel or live in any of the time that's not in this particular time zone. But if you're in any of the time within this particular time zone, this is very, very relevant. Okay, so this is still with this, you can still go back to that particular site, then choose from here, just click on this drop down, choose the time zone based on where you are. Then you are going to see the various trading section. Like what we have here, it is the status is showing close because today is Saturday, so none of the market is open. So that's why it's showing close. But let me just show you a quick screenshot I took as of yesterday when the market was open. All right, so this is actually a screenshot I took yesterday when the market was open. So you see that it's going to market open. So when the market is open, it's going to market open. So that is just it. So this is going to, that site is going to come in handy. Maybe if by tomorrow you travel to any country that is not captured there, so you can just come and change it to that particular time zone or whatever. All right. So I believe that is clear, but if that is not clear, you can let me know in the comment section. Now let's look at the various tradable asset classes in the forex market. Yes, so these are some of the tradable asset classes in the forex market. We have the currency, or what we call the FS. Then we have the cryptocurrency, where we trade the crypto assets. We have the commodities, where we trade things like the cocoa, the cottons, and granules, and the whole of them. So we trade these guys in the market. We have the shares, we have the indices, we have the energies like the crude oil markets. You can buy barrels of crude oil from the forex markets. Then we have the metals, something like gold, silver, and the whole of them. Now, I want you to know this. It's very, very important. The forex markets, it operates on what we call CFD, contract for difference. It operates on what we call, when you are trading it, especially once it's not in the spot, you get, it's operating on what we call CFD, contract for difference. So what this simply means that, let's say, if I want to buy 10 barrels of crude oil, right? So I'm going to buy that 10 barrels of crude oil, but my broker is not going to bring the 10 barrels of crude oil to my house. So what the broker will just do is going to take the difference between the price at which I bought that 10 barrels of crude oil and the price at which I sold that 10 barrels of crude oil. Now, the difference in the contracts or the difference in the price will not be my profit, or it will be my loss. So it can either be your profit where market goes in your direction, that's as you predicted, or it can as well be your loss when market go in the opposite direction. Maybe your prediction or your analysis of the markets is not wrong, or maybe another thing happens. So just bear that in mind when you are trading some of these assets. You are trading CFD, so don't expect anyone to bring the actual asset you have. Or maybe when you are buying gold, if you are buying gold in the forex market, nobody will bring gold to your house. You are just trading the CFD. Yeah, but for some markets like the cryptocurrency, whereby we have the futures and we also have the spots. So futures is operating on CFD, get, and but for the futures, but for the spots, you're actually getting the actual contract. You're actually getting the actual product you're buying. But in the futures, you are just getting the CFD, the contract for difference. And also CFDs, especially for the futures markets, it operates on what we call quarters. it operates in what we call quarters. It's the expiry date is always in quarters. So more of that when we go to the cryptocurrency markets. Now let's look at how we execute trades. Now, so these are the various trade execution types. Yes, so stay with me. I want you to get the understanding. Get. I'll see show you from the MetaTrader 4 or from the TradingView, but I want you to actually understand it before we go into these guys. Now we have two primary types of execution types. Now it's either you are making a trade or you are placing a new order or you are executing a trade using what we call market order or instant execution. Get market order or instant execution. So what is market order or instant execution? Now, if I'm buying an asset by market order, so what I'm simply saying is that I am comfortable. I'm okay with this price that the market is giving me. I want to buy at this price I am seeing currently on my charts. I want to buy at this price I am seeing currently on my chart. So that is what it means by market order. So let me just, I know that this might be somehow strange, but I'll still explain it. Yeah, I just want to use it to show you something. Like for now, the price of GBP/USD is trading around 1.285585. So this was the price of when the market closed on Friday. Now, if I want to execute this trade by market orders, so what this simply means that I'm buying it at this price. So that is why it's called market order or instant execution. So I'm buying it at this price that the market is giving me, right? So I'm buying it at this price that the market is giving me. So that means I don't have the choice to put my own price. So it's just him indirectly telling the market that, yes, I've accepted the price you gave me, place this trade using the price you gave me, you get. So that is for the market order or the instant execution. Now, when you now want to put your own price, you don't want to use the price that the market gives you, then that is now when you come to the pending orders. So in the market order, you can either buy or you sell. Then we have the pending orders. Now, for the pending orders, we have the buy stop, we have the buy limits, we have the sell stop, and we have the sell limits. So what are these guys? So let's understand what they mean. Now, for a buy stop, is an order to buy above the current market price. Okay, is an order to buy above the current market price. Okay, let me go back to this MetaTrader form or be this MT5. So the current, this is, I think, right, this is the current market price here now. I mean, this line is the current market price, which is 1.28586. Now, if I'm buying with buy stop, what this simply means that I want to buy, maybe I'm buying at a price above. I want to buy at a price above the current market order. So when I'm buying above the current market order, that means I'm going to use buy stop. I'm going to use buy stop. You get, but now when I want to buy below the market price, then I'm going to use buy limit. Buy limits. Sorry for my freehand sketch. So this just so when I'm buying below this current market price, I'm going to use buy limit. So stay with me. I will still show you how these two works by placing a trade. You get. Now, because at this point, maybe you might be asking yourself, how will I know? How will I know that maybe I'm buying at below the price, I'm buying above the price? So that is one good thing about this system or the MetaTrader. You get, so the system is already automated, so the system can't allow you, like, say for instance, okay, I think the market is closed on this guy, so let me go for the currency market. The market is closed, so I can't actually trade any currency assets for now. So let me go to the indices market. Get, so let me go to the indices market. So maybe for an indices market, let's say, all right, so let's say I want to open a trade on this particular asset. Yes, I just want to open an arbitrary trade. So there was no analysis on this, so I'll see close it. So don't do that at some. Before you place a trade, you must have an analysis or what is supporting your move. Yes, so I just come to this new order. Then if I'm in this new order, you are going to see type. So this is now the trade execution type. So it's asking you, do you want to use market execution? So if you want to use market execution, that means like currently the current price is trading at 1591. That is from this place we are seeing the price where my cursor is. We have 1591.7. So this is what the price is currently trading at. Okay, you can as well see it here. So this is the selling price. This is the buying price. That is the bid and the ask we made mention of. You get. So this is the ask, this is the bid, this is the ask, this is the bid. Now, so if I want to buy by market order, I'll just click buy. But before then, I have to maybe put my volume. We still come back to this volume when we discuss loss side. Then if I now want to use pending orders, so if I click pending orders, now if you watch, when we are in this market execution, we don't have the option to choose our own price. That is it, because you are telling the markets, I'm comfortable using your own price. So that means you cannot make your own choice. You cannot choose your own price. Okay, but when we switch to pending order, you see that it's now have an option where you can now put the price where you want to buy. Now, under this type, now we can now click on this drop down. So you now have buy limit, sell limit, buy stop, sell stop. I did all of that. Now, I say that for the buy stop, we use it to buy above the current market price. All right, so let's see how it works. So I want to buy above the current market price. So that means I'll use buy stop. All right, so I'll use buy stop. So the current market price is 1.588. So maybe I want to buy one lot. Yes, I'll see come to this lot and volume when we treat lot size. So at what price I want to buy. So let's say we want to buy at what price? Okay, let's say we want to buy at this or 1 point. This price is above the current. This is the current price. I want to buy above. So that means I'll be buying at nice now. The type of pending order you are now going to use is also dependent on your analysis, yet. So let's say I want to buy at 1.669, 1.691.25, yet. So I will see the explain stop loss and take profit, you get. So if I do this, it's going to execute the order, and immediately execute, you are going to see buy stop. Now, but now let's do another thing. Let's try to use buy stop, but using buy stop, let's try to buy below the price and see if it will work. Because you know that we use the buy stop, right, to buy above the current market price, but we will use the buy limit to buy below the current market price. So what I want to do now is to use buy stop and put a price below the current market price. Let's see if that is going to work. All right, so I'll go back to pending order. I'll go back to buy stop. Okay, let me So I want to buy at a price below the current market price. Let's say I want to buy at 1491.52. So you see that this button to place the trade, it's not clickable again. It's not clickable again. So this is one of the ways to tell you that what you are doing is wrong. So you can't be using buy stop and you want to buy below. So, but if I change this to buy limit, it's going to be active. Have you seen it? So when I change it to buy limit because I want to buy below the current market price, it's now active. You get that. I will see close this. I will see close this trade. I'll see close it. Then so these are these are the various other types based on the pending order. So we also have the sell stop and the sell limit. So these are just the opposite of the buy stop and buy limit. So for sell stop, we are going to use it to sell below the current market price. Then for sell limit, we are going to use it to sell above the current market price. Now, but for me, in practice, all over the years, I've been using more of buy limit and sell limit because if I want to buy, I want to buy at discount. So I want to buy at a price below the current market price. So then if I want to sell, I want to sell at premium. That means I want to sell at a price above the current market price. So maybe in practice, you might just be using buy limit and sell limit. But I believe we've understood what it means. Then, but if you still don't understand, let me know in the comment section. So I want to quickly close this trade. It's not a good trade. I did not do analysis on it, so let me close it, guys. All right, so all right. So I believe the trade execution type is clear. Now let's look at what we call the take profit and the stop loss. Now, take profit is the point or price level at which you want your broker to close the trade and keep the profit for you when the trade goes in your favor. So why do you use take profit? So maybe let's say you've placed the trade and you are not online, but you want the broker to close the trade when the market goes to a particular level, then you set your take profit. So once price gets to that level, your trade will be automatically closed and your profit will be in your wallet. And also, if you have a loss, it should still be deducted from your wallet. So it can be either two ways. When the market goes in your favor, you make profit, but when the market goes against you, make loss. Now, stop loss is the maximum loss you want to have in a trade when the trade goes against you. Now, this is very, very important. Now, stop loss is like, will I say, the brake in your car. So stop loss is one of the bedrock of risk management. So at every point in time, I think we discussed this more on the risk management section. We discussed this more on the risk management section. So risk management section. So in the risk management section, we deal with this more, how you should be able to know your losses ahead of time. So when you do this, it's going to condition your mind. Maybe when the trade is going against you, you won't panic too much because you already know how much you will lose if the trade goes against you. Okay, so that is why stop loss is important. So it helps you to know the maximum loss you are going to have. So we still do this more when we come to the risk management section, and also how you do the calculation using the lot size calculator and the rest to know the maximum loss we are going to have in the trade and the whole of that. But for now, let's focus on understanding the basics. So it's the maximum loss that you want to have in a trade when the trade goes against you. So it helps you to protect your account. So this is very, very important. In short, at any point in time you are trading, if you can't put your stop loss, don't trade. If you can't put your stop loss, don't trade. So it's better you don't put a profit than you don't put stop loss. So you must always put stop loss. That is one key when it comes to risk management. So with your stop loss, you already know how much you are losing. So you already know the maximum you are going to lose if the trade goes against you. So with that, you've already conditioned your mind. Okay? So it's the bedrock of risk management. So you don't joke with this guy, please. It's very, very important. So in the risk management session, we are going to treat this more, go in depth to understand it more, and how we do the whole calculation and everything. Now let's see how you make profits in a buy trade. So when price is rising, take for instance, you bought an asset at $1,000. You know, after a while, maybe price rose to $2,000. And remember, this $2,000, maybe this is where you have your take profit. That is your take profit. So that means at this $2,000, your broker sold off the assets. Okay, your broker sold off the assets at $2,000. Now your profit is now the selling price minus the buying price. So when you do the subtraction, you're going to see that you're going to have $1,000 as profit. So this is for the buy trade. Now we also have for the sell trade. So for the sell trade, let's say that you sold an asset at $2,500. Then after a while, price fell to $1,000, and you buy it back at $1,000. So your profit from the trade is 2,005 minus 1,000. So you have $1,500 as profit. Now, at times he used to confuse some traders when it comes to how you make profit from selling. But let me just use this scenario, or what most of us might relate to. Now, take for instance, let's say that you have a friend who has an iPhone, you get, and maybe you are looking at the Apple stock. From the Apple stock, you know that, okay, maybe the price of iPhone, okay, let's say that iPhone 16 is coming out, and you know that the price of iPhone 13 will drop by tomorrow or by next week. And maybe by the time you saw it, the price of iPhone 13, let's just say arbitrarily, is 2,005, right? So you went to that your friends who have that iPhone 13. You ask him to borrow you that phone, that you are going to return that phone to him next week. You ask him to borrow you any iPhone 13, okay? That you are going to return that iPhone 13 back to him next week. So you guys bargain and enter the contract, right? So your friend agreed to borrow you the phone. So your friend gave you the phone. So he's giving you the phone on the confidence that you are going to return back the same phone. I mean, you are going to return back an iPhone 13 to him next week. So whether if it's the same color or not the same color, but the phone has to be iPhone 13. So when you took the iPhone 13, you entered the market and you sold it at 2,005, right? Then by next week, iPhone 13 fell down to 1,000. Remember, you have 2,005 in your pocket. Now, with that 2,005, you went back to market. That same phone you sold at 2,005, you went and bought it back at 1,000. So you now see that from that 2,500 you have, you've removed 1,000. So when you remove 1,000, you have 1,500 as profit. And also you've bought the phone and you've taken it back to your friends. So everybody's happy. So this is how it happens when it comes to the the sell trade in the currency market or in the financial market. So this is actually how the whole thing happens. So I believe it makes more sense now. So let's look at the position of take profit or stop losses in your buy and sell trade. So when you are buying, right, your stop loss will always be a price below your entry, because when you are buying, you are of the opinion that the market will go up. So that means you are bullish. So your stop loss will have to be a price below your entry price. Then your take profit will be a price above your entry price. So the reverse is the case for selling. So when you are selling, right, your stop loss will be a price above your entry price, and your take profit will be a price below your entry price. So I want to quickly go back to MetaTrader 4 and show you these guys. Yeah, let me just show you this guy before we proceed. So I'll be going with the indices market as well, because this is Saudi and the currency market is not open. So I can't actually execute a trade on the currency market now. So that's why I'm using the indices market. Okay, so let me see. All right, so let me see. I just want to pick an arbitrarily buy. Okay, so I don't want to buy by market order because I did not do analysis. You get, so let me buy by pending order. So I'll buy by buy limit so that I'll be able to buy below the current market price. So I'll buy at a price of I'll buy at the price of 1491.52. You get, so I'll still explain this volume or lot size. So this is the price. I'm buying at 1491.52. All right, then since I'm buying, my stop loss has to be a level below my entry. So maybe I want to use the price of 142360 as my stop loss. We get to 1423.60. Then my take profit has to be a price above my entry. Maybe I want to use the price of 176320. Get 1763.20. You get, so if I place the trade now, you are going to see that we are going to see the TP, which is a price above my entry, while stop loss is a price below my entry, right? So this is it. Now I want to do something. Now I want to try to buy, you get, but I want to put my stop loss above my entry. Let's see if this will go. You get, let's see if that will go. All right, so I'm still using buy limits. So I'm buying at 1491.52. All right, so and I want to put my stop loss above. Let's see if that will work. 63.20. Now you see that immediately I put my stop loss at a price above. This place button I'm not able to click it. It's disabled. So this is to protect me from making an unnecessary mistake. So, but as long as I'm putting my stop loss at any level below this entry price, it will go. So that's why to tell you that your stop loss is very, very important. So even your broker knows it. So that's why they enforce it in the system, so that they make sure that anytime you are putting your stop loss, you are putting the right thing. Anytime you are putting your stop loss, you are putting the right thing. You get. So that is that about the position of stop loss. Okay, let me do for a sell trade. Yes, let me do for a sell trade. Maybe, so let's say I want to sell. Yes, so I'll use pending order as well. That is, I'm going by sell limit. Okay, so since sell limit, I want to sell at a price below the current market price, which is, let's say I want to sell at 41.770. Get. So if I'm selling, my stop loss will not be a price above my entry. Get. So my stop loss, let's say I want to use 4301.58. Then my take profit will have to be a level below my entry. So let's say I want to use, yeah, so now I'm just using this arbitrary value to show you how this works. So in real life, I mean, when you are trading, you get this level from your analysis. So from your analysis, you are going to know the level at which you are taking profits. You are going to know where you are going to put your stop loss and all of that. So we still come to that. Get. So when you do this, you see that the market has played the trade. So your stop loss is above, while your take profit is below. So if you try to make a mistake by bringing your stop loss below, it will not work. It will not work. But if you are bringing your stop loss to any price, as long as it's not below the entry, it will work. But you can't bring it below. So this is still one of the things the broker put in place, or one of the things that the MetaTrader 4, the MetaTrader 5 put in place to protect you from losses. So I believe that is clear. That is clear on the position of take profit and stop losses. Now let's go to what I call the Forex quotes. All right, so I think I will call the video here so that it won't be long. So we continue from here. We continue from the Forex quotes in the next video. So just watch out for the next video for the continuation of the Forex quotes. So I don't want this video to be long so that it will be easier for you to review and go through. Thank you.